JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 10th of January and we are alive again. So, hopefully you can hear me well, you can see okay my screen and everything. So yeah, this is going to be the first live video in a while that I've done. So yeah, guys, hopefully from the technical side we can everything could work okay. Well, will work okay. But yeah, so yeah, thank you very much for joining in, guys. I really appreciate that. So before we jump into the charts, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com. And yep, click on the research tab right there on the top. So now then, guys, yeah, so this is, like I said, I hope everything's running well here and smoothly. So I'm back to my old place, so hopefully that stays like this. But again, I will have to unfortunately update you on all that because, well, as you understand, due to the kind of the situation across the globe in relation to the whole coronavirus. I mean, certain measures are taken, and of course in different workplaces as well. So yeah, guys. I mean, apologies for the inconvenience of, let's say, not having the live video. At the moment, this week, the live video is. It will go smoothly, will go okay. Going into next week, I'll have to update you that on that closer to the end of this week. But yeah, hopefully, like I said, hopefully we'll see. Hopefully everything goes well. But jumping back into the charts now, guys. So if you remember a while ago, I talked about Nikkei 225, and I told you to keep an eye on this potential symmetrical triangle pattern. Of course, last week we managed to break the upper side of this pattern, and yep, we managed to stay kind of above the downside line, but slightly kind of we're actually I would say near this 29,333 territory. And if you remember in my last video that I've done on Wednesday, I said that, well, this doesn't really make me very confident, I would say, because this doesn't look very promising. I mean, what I needed it was that I wanted to see a stronger move above this barrier, but as you can see, we did not get that, and instead we drifted back down, and well, we're currently kind of, or I wouldn't say currently, but we've ended last week near this, slightly above this 200-day EMA. Now, the index was closed today, so according to the calendar, I think it's gonna open up tomorrow. Yes, that's correct. So let's see where this is, how this is gonna play out, and where this is gonna open. But for now, as long as it stays inside this pattern, inside the triangle pattern here, yep, I'm gonna kind of take a step away from it and just continue observing the price action. Now jumping into Shanghai Composite very quickly. So here, after we broke the lower side of this little range where the index was trading in, we drifted lower initially. We fell below that 100-day EMA, but as you can see, it kind of did its job and did provide support. And although we did open lower today, but as you can see, the index came back above this 100-day EMA. So yeah, this kind of just shows that one of these EMAs, and in particular here is the 100-day EMA, is kind of acting as a nice area of support and one of the levels and one of the areas to keep an eye on. So previously, as I said, I talked about this being as a possible range. We did drop below the lower side of it. Yep, we traveled lower, but we we found this 100-day EMA as a good obstacle, as a good area of support, and basically you can see that the index is trying to climb back up now. So basically now probably the best option would be to get rid of the line right here, ignore it, and instead I will mark the low of today, the current lowest point of this week, near the 3,555 territory, and yep, probably the whole kind of approach needs to be re-looked at. And one thing for sure, I'm going to keep an eye on this upside line right here, taken from the low of the 28th of July, so this medium-term upside line. So we do have a bit of space here still until we could reach that line. I'm not saying that we will, but there is a possibility. From the shorter-term perspective, I'll keep an eye on this downside line right here. Taken from the high of the 13th of December, and also what I want to just to kind of put it out there, maybe, just maybe, we could be seeing a bit of a, I wouldn't say this is probably the best drawing here, but maybe, just maybe, we could see this one as a possible falling wedge pattern. And we do have a few good tests here of this lower side of the potential falling wedge pattern. So in a way, if it is kind of a falling wedge, then well, I mean, and we are also still trading above this upside line, so everything's kind of leading towards the upside in general. Because as you know, according to all the tier rules, falling wedges are seen as bullish indications. Now, don't get me wrong. I mean, yes, that could be the case, but until it trades, as long as it continues to trade inside that falling wedge pattern, it could still kind of, let's say, either move sideways here or maybe even drift back to the downside here, or again to the downside. But let's be very careful near this upside line, because if it provides good support, maybe this is where the turning point could come, and then we could travel a bit north here. So long story short, if you're looking for some upside, then at least wait for a break of the upper side of this potential falling wedge pattern. Or if we drift lower here, keep your eyes on this upside line together with the 200-day EMA, and then we'll take it from there. I'll definitely pick up on this one because, to be honest, this is shaping up as something quite interesting. DAX, the German index, yes. So looking at the picture here, I mean, you can see that last week we had a good run. Initially, the first half of the week we had a good run. We tested. Let me just double check very quickly. We almost managed to test the all-time high. We failed to do so. And yep, then we basically fell off the cliff here and started drifting to the downside. Now, we found support near this key area, near these key levels. I talked about those, the 15,943 and the 15,975 levels. So In a way, I mean, if this can somehow continues to provide support, maybe we could see a nice little rebound here. But most likely, some of the levels have to be readjusted now, and we need to have a look at this. And basically, we need to probably rethink some of these levels. Now, one of the levels that I'm going to keep an eye on, of course, is this Friday's high. Near the 16,044 territory. If we clear that level, then yes, we could go maybe for the upside again, maybe for a nice good push towards this 16,202 zone, or maybe even slightly higher levels. So, long story short, looking at the cash index right now, we can see that the price is trying to climb higher a little bit. It's trying to get closer to the 16,000 mark. But as I said, yeah, I would prefer maybe at this point in time, I would prefer to see maybe a push above Friday's high in order to get a little bit more comfortable with the upside. The S&P 500, very quickly on this one, so also a nice good drift lower. Also, what I'm going to keep an eye on here from the more of a medium-term or actually short-term perspective is this upside line taken from the low of the 4th of October. So I think that yeah, if DAX is traveling higher, maybe we are seeing, yes, we are seeing the S&P 500 cash also pushing a little bit to the upside, rebounding from the lows of Friday. However, it's currently sitting at around 4,684.85 territory, so basically below the 21-day EMA still, and below this hurdle, this 4,718 zone. So what I would like to see here in order to maybe get a little bit more comfortable with the upside again, I would like to see a push above this barrier. Let me just quickly mark this because it seems like it's quite an important one to watch. So for now, long story short, I would say keep your eyes on this barrier for the 4,718 zone. If we pop above this, we also pop above the 21-day EMA, and potentially more buyers could join in. So, and then yes, we could go for maybe even for that all-time high again. So let's see how this is going to play out. But I'm not excluding a possibility, of course, if it continues to trade below this highlighted territory, below this highlighted barrier. I'm not excluding the possibility for this one to see maybe a larger correction here to the downside, and then maybe getting a slight hold up near this upside line right here. But again, don't get me wrong, this upside line is a little bit on the tentative side. However, like I said, I'll keep that for now. If this upside line gets broken, that's where it could become a little bit more interesting for a few more sellers. Very quickly on DXY, so yep, the choppiness continues, the sideways activity continues, and yep, we continue to trade in between this range. So I'm not going to spend too much time talking on this one because I talked about it last week a lot, and basically I'm still waiting for a violation of one of the highlighted territories before I could consider maybe the next short-term directional move. The only problem here is with the downside is that even if we drop below this highlighted territory here, the lower side of the range, then keep your eyes on this upside line taken from the low of the 25th of May, which could provide some support. Jumping into gold very quickly. So now this is where it's getting a little bit messy. Now let me get rid of all the drawings. And oh, by the way, before I get rid of it, this is the upside line that I had before. So like I said, I want to get rid of it, get rid of everything, and just at the moment maybe focus on the EMAs, because currently you can see that the EMAs are actually acting, or should I say, the commodities actually trading around these EMAs and kind of oscillating around these EMAs. And in general, since probably around somewhere around February of last year, the beginning of February of, or actually more of a maybe mid-January already of last year, for the whole year, the gold has been getting kind of, let's say, or it was trending just, it was just neutral, and in a way there was no clear uptrend or downtrend. It was just moving kind of, let's say, sideways. So for now, I would say, looking at this picture overall, the bigger picture, you can see that maybe, just maybe, we could see here a nice kind of triangle pattern here as well. And yep, maybe we're actually getting into a bit of a squeeze now. Let me just put this on the chart. I mean, this is probably not going to be ideal, but however, I'm going to keep this on the chart. And yep, for now, let's see if this is going to be the case and if this is going to work out nicely. So, long story short, like I said, at the moment, if we just judge it from the kind of EMA perspective here on my daily chart, then the fact that we dropped below all of the EMAs kind of doesn't really paint a very positive picture, so it kind of sends that negative signal. However, I'm not going to rush into anything here, and I would say if it continues to trade below all of the EMAs, then yes, I will potentially aim for slightly lower levels right here. If it pops back above it, then I'm going to go for the upside. Pretty straightforward here. WTI oil, very quickly on this one. So looking at this picture here, you can see that the commodity managed to push higher last week. It did climb above this barrier, this 79.33, and it did push above it. But then on Friday it fell back below it, and excuse me, and kind of stayed below it. Now today we've pushed higher, and but we have we still remain below the 79.33 territory right here. So long story short, guys, if we're looking for some upside, that's going to be quite interesting here. So from the shorter term perspective, I would say keep your eyes on this upside line here. Now, don't get me wrong, it's a little bit tentative here. I mean, we're currently just sitting just bang on it, but if we pop again above the 79.33 territory, I'll continue aiming higher and I'll go for the upside. But if we fall below it, I would need to see maybe a drop somewhere below this area right here, somewhere below the between the 77 territory, or actually around the 77 territory. So if we drop below that area, then yep, I will consider maybe a bit of a larger correction to the downside. However, if we get closer to the 74.30 territory right here, I'll pick up on this one, and this is when I will probably mention something else here. But again, I'm not going to rush into anything for now. Long story short, if you're looking for some upside, wait at least for a pop back above the 79.33 territory, and then slowly we could aim for higher levels. So yeah, that's kind of the game plan. Litecoin, very quickly on that one. So yep, after dropping below the 139.75 territory, the crypto drifted lower. It did reach the lowest point of December, and near the 126.80. It managed to overcome it a little bit here, but as you can see, it continues to provide good support, this area. So for now, if you're looking for some upside, then probably at least wait for a push back above this hurdle, this 139.75, because depending on how we're going to play out here, I mean, I want to keep an eye on the 21-day EMA as well, because so far that EMA did provide good resistance. However, if it pops back above it, then this is where it could become a little bit more interesting for a few more buyers, guys. So keep that in mind. For the downside, pretty straightforward as well. I need to see a drop below that 126.80 zone in order to go for lower levels. Now jumping into AUD/JPY, jumping into a few pairs now before I run out of time. So yeah, AUD/JPY, haven't looked at this one for quite a while, but previously I can see that basically previously I mentioned this upside line, which so far is working out nicely, so it's providing good support. If you're looking for the upside, now on this one I will be very careful right now, and if you're looking for some upside, I will wait for a push above the current highest point of January near the 84.32 zone. If we do that, if we clear that level, then yes, we'll go for some higher levels. My next target could be the highest point of October of last year, of course, and then we'll take it from there. But if by any chance this upside line gets broken and we see a drop below last week's low near the 82.63, then that's where it could become quite interesting for a few more sellers, guys. I'm not saying that I'm going to go radically to the downside here, no, but I'm just going to be very careful, and initially I'm going to aim for these EMAs, and then I'm going to aim for the I'm going to aim for maybe some of these lower levels. But again, like I said, let's go step by step on this one. I'll pick up on this a little bit later. Now, USD CAD very quickly on that one. Quite interesting developments here. So you can see that the pair is kind of doing what I was talking about last week. So that's quite happy about this one, to be honest, because if you remember last week and the week before that, I talked about this potential idea of maybe a head and shoulders pattern with the neckline being in this area approximately, and I said that if we climb higher, but then let's say we fail to stay maybe above that 21-day EMA, or even I think that the level that I've drawn here was somewhere around here, this 1.2854-55 zone. I said that if we don't really kind of climb above this area, then well, maybe this could be forming a possible right shoulder. Now, if that's the case, and if we're eventually going to break the so-called neckline here, then of course everything's working out according to all the TA rules, and lower levels could be met. And then of course, maybe, just maybe, this drop lower here could come in line with the possible push higher from oil here. So I'm not saying anything, but just like I said, keep an eye on both of those. USD CHF. Now this is quite interesting here, that we are having a bit of an opposite situation here. So Swiss franc is a little bit on the weaker side right now, and if you remember last week I talked about this idea of being a potential maybe falling wedge pattern, but I said that wait for a break and wait for that body, the daily candle, to stay above the upper side here. Well, we had a bit of a tease here, as you can see, kind of a few false breakouts on Friday, then it drifted back down, but now we're seeing the bulls are picking up on this one, and to be honest, I think that was kind of enough for the bulls, and now it seems that they want to push this one higher. I'm still keeping an eye on it today, because if by any chance it drops back below the upper side of this falling wedge, maybe we're not really done with the downside. But if it stays here and stays above the 0.92 territory, somewhere around here, then well, I'm going to continue aiming higher, guys. GBP USD. Now this one's quite interesting as well. We are approaching this downside line here, taken from the high of the 1st of June. Oh, and by the way, the problem here with all these US dollar pairs is the fact that DXY right now is undecided, and it's kind of moving sideways. So it's mainly kind of their counterparts that are making the big moves here I won't say big moves, but bigger moves, slightly bigger moves than the US dollar, and yep, that's what's driving right now some of these US dollar pairs, or should I say where the pairs where US dollar is one of the in the pair, if I can explain, if I can express myself that way. So long story short, for now, looking at this downside line, yes, that's where GBP USD is currently sitting at. It's near this downside line. It's near the 200-day EMA, so everything's pointing kind of for a possible maybe break. However, I'm not going to rush into anything here. If it breaks, that's where, and if it breaks and stays, if the pair stays above this downside line, that's where I'm going to get comfortable, maybe with slightly higher levels. At the moment, I'm just observing this one because it's way too close here, because maybe it's going to be that third test here, that third big test, and then we could see maybe maybe another decline if this downside line is something to be considered. And then, yeah, so if you're looking for some downside and maybe for some reassurance, I would say keep your eyes on the 21-day EMA. If we fall back below it, yes, I'll consider maybe a bit of a move to the downside here again. EuroCAD, very quickly on that one. So yeah, we're drifting to the downside here. We broke this upside line. If you remember, last week I talked about this potentially being a squeeze, and yep, for now it seems that we're drifting to the downside. We're breaking this upside line, but I'm gonna be very careful here for now. So I'm gonna get rid of this upside line, but I'm gonna keep this downside line taken from the high of the 20th of December, and most importantly, I'm keeping an eye on this low of last week, or the current lowest point of January. Or I think we already created a new low, but let's put it this way: the lowest point of last week, nearly 1.4324. If we clear that, then and we stay below that, then yep, lower levels could be met here. However, if by any chance by the end of the day we remain somewhere here, then maybe we're forming for now just a descending, small little descending triangle pattern here, and which also is a bearish indication. However, we might see some activity for now inside that pattern. So, but I'll pick up on this pair a little bit later this week. EURUSD. So, yeah, for now, the same game plan. I mean, the same idea here with the one that I talked about previously. So we're stuck here in between these these trend lines here. So the short-term one taken from the low of the 24th of November, we're sitting above that, and we're still below this medium-term downside resistance line taken from the high of the 1st of June. So we need to see a clear break, a clear violation of one of those levels or one of those lines before we could consider maybe the next short-term directional move. At the moment, we're just seeing a bit of a squeeze. So, yep, keep on watching this pair. So guys, that's it for this session. I really hope you found it useful, and thank you very much for joining in and watching until the end. I really appreciate your views, your likes, your well, you didn't have any comments, but in general, guys, thank you very much for watching. Hopefully this was useful for you, and if you want to catch me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, have a wonderful trading day, stay safe, and I'll see you later. Bye-bye.